31st of December, the final day of the year. So let's treat this as 1st of January lah, okay? Because I will usually do this in the first week of a new year, but first week of new year is like 1 week later lah, okay? So anyway, tomorrow will be 1st of January, so we might as well do this this week. So for those who have been here for the past 2 years, right? This one should be very familiar to you. We'll be doing some goal setting. We'll be doing some portfolio rebalancing. So it's the same thing lah, just that the number are different. I am updating the number based on my current year performance lah, okay? So roadmap to $1 million retirement account, $1.5 million retirement account. So this is my personal final target lah, okay? So maybe some of you already have 1.5 million in your account. It's like a chicken feed number to you. Of course, you can change the number to whatever you want lah, but at least you understand the process of the portfolio rebalancing and how to set your goals lah, okay? But also, if you are someone who just graduated like mid 20, early 30, those kind, right? I think this you can use this as a guideline to sort of kickstart your trading, your investment journey lah, okay? So it is just a benchmark number, something that is not out of reach to a lot of people lah, okay? So I don't want to set target like, oh, like I want $100 million and then I want a private jet or Lamborghini or all those like really really like way too far-fetched really lah, okay? So let's begin. Firstly, right, why $1.5 million? Why do we want to hit $1.5 million? There are some calculation behind. So I am counting 4% yearly dividend lah, okay? So for 4% is also equal to your special. Excuse me, I'm burping a lot. 4% is equal to your special CPF account lah, which give 4% yearly dividend lah. So we can use that as a benchmark lah, okay? So I'm not trying to like ask you to go and find something that can give you like 10% yearly dividend, those kind of nonsense lah, okay? So all these numbers here is something that you can achieve very, very easily without pushing any boundaries. So if you have a 1.5 million account, right? And that account gives you a 4% yearly dividend, which is easily achievable. You can get about 60K per year, and it will be equivalent to 5K per month in passive income lah. So personally to me, right, 5K per month is a very comfortable amount that you can retire on, or you can comfortably live with 5K per month, okay? Of course, assuming you have paid finish or mortgage or whatever lah. But even if you have mortgage, right, I think 5K per month is still a very, very comfortable amount. So your startup requirement. So in order to achieve this, right, we will give us some starting parameters lah. Okay, so let's say you are someone who is starting from ground zero, like you have nothing, you are just starting out, right? So I'll give you some startup requirement, and we will use this number to sort of calculate how long we need to achieve the 1.5 million target, okay? So these are very, very modest, extremely achievable amount. 30K trading account, you can start with 30K trading account. So imagine you are someone just graduated from your uni, you just got your first job, you are earning like 4.5K a month, or I don't know, 5K a month. I'm not sure how much uni are earning nowadays, okay? So I think with a 5K per month salary, right? I think it is not that hard to save up 30K lah, and it is not hard to also chip in 1,000 per month in discipline saving lah, okay? The video is shared. This video is, I mean, this video will be shared to you lah. And whenever I upload the video, right, there will be a PowerPoint that is attached also lah, okay? So not to worry, you will get this PowerPoint. So the startup requirement is that you have to save up 30K in trading account, but not only that, right, you must be able to set aside $1,000 per month in discipline saving for long-term investment. So this is something that I'm personally doing also. I used to do 1,000 per month, but after I become a little bit more comfortable, right, I'm doing 2K per month, okay? And that 1K per month or 2K per month, right? It is mainly for disciplined saving plan, okay, in some dividend unit trust or STI ETF or something brainless, okay. It is meant to be passive and brainless. So personally, I'm using STI ETF simply because I want the dividend return. I don't want growth. I don't need growth. I just want dividend return. That's the reason why I am investing most of my passive income or this auto saving plan into STI ETF, okay. So the target here is that on your 30K trading account, right, you want to achieve at least 30% yearly return on your trading portfolio, okay. And on a trading account, right, 30% yearly is very easily achievable. It's not hard. And 4% dividend return on your investment portfolio is also, I would say, a very reasonably able to attain that kind of target, okay. So what I will be assuming is that at the end of the year, right, you will be reinvesting your 4% dividend back into your investment account. So in this startup requirement, right, there are a few assumptions here. Number one assumption is that I am not accounting for any capital growth in the investment account, okay? So I'm just treating it as whatever money, whatever capital you put in, you are getting 4% return. So maybe STI ETF can appreciate in the next 10 years, there's a capital gain, but I am not accounting for that, okay? So this is actually a very conservative kind of target that I'm setting for myself. So remember all these parameters, So this is actually my personal portfolio. 30% of my portfolio is in trading, okay? Trading capital. So the account that you see me trading is actually 30% of my total portfolio. The other 70% is actually in investment. So when I say investment, right, I'm referring to the 1,000 per month that I'm putting in every year, okay? So I mean, I've been doing that for the past like 8-9 years already. And what I will do is, at the beginning of every year, right, I will rebalance some of my trading profit and take that trading profit and put them into my investment account to maintain this 70-30 ratio. So the purpose of maintaining this 70-30 ratio is that, number one, right, trading is actually quite, I would say, a lot more risky compared to investment. And not only that, trading require high effort also. Okay, so I need to account for a situation where maybe one day, right, what if my entire trading account blows up? So if that happens, right, then I'm only losing 30% of my total portfolio. Okay. But not only that, right, the investment portion is actually giving me passive dividend return every year. So I really do want to compound that passive dividend every year, which is why I want to maintain this 70-30 ratio. Because I mean, at some point, right, the end goal is that I want to stop trading at some point, maybe when I hit like 50. So I just want to stop trading because maybe by 50, right, got new brokerage software. I got lost touch with all the new trading platform, new trading software, then like don't want to trade already, okay? Just want to retire already. So the purpose is to keep my investment account high enough that I am able to get that $5,000 passive return per month, okay? So when you rebalance your trading profit into your investment fund, right, what you are doing is actually you are converting your high risk, high effort income into a passive income. So a lot of people think trading is passive income, which is not, because trading is actually very effort intensive. You need to do a lot of work. You need a lot of effort to maintain your portfolio and all this. So it's actually very, very effort intensive, okay? So what you are doing is you are converting all this high effort income into a passive income. As I mentioned, the point of STI ETF is for dividend, okay? So if you dollar cost average NVIDIA, you are dollar cost averaging a growth stock. So that one is a different story. So we are make sure we are focused on our goal, okay? So this 70-30 portfolio, right, you also realize that there is no cash component here. So I don't really like cash. But if you search online, right, you will see that there are a lot of different kind of portfolio that you can sort of adopt. For example, Investopedia will recommend a very conservative portfolio where only 40% is in stock. I think this is an investment portfolio lah. Okay, it has no trading component. 40% in stock, 60% in fixed income like bonds, corporate bonds or saving bonds, and then 5 to 10% in cash. Or you can have a slightly more aggressive investment portfolio with 60% in stocks, 30% in bond, and 10% in cash. So you can actually adopt a lot. There are many ways to adopt your portfolio lah. Okay. So the thing is that there is no correct portfolio structure or portfolio ratio. Your portfolio, whatever structure that you decide to choose, whatever ratio that you decide to choose, right? It is supposed to reflect your strength. It is supposed to reflect your goal, your risk appetite. Okay. So as trader, right, or as investor, right, if you truly want to be successful, you must get rid of that template mindset. Like, hey, give me a template lah, bro. Hey, oh, bro, give me checklist lah. I want a checklist. I just want to brainlessly tick the checklist and then profit coming ready. You must get rid of that mindset. Okay, it's very important, because there is no one size fit all kind of portfolio structure or trading strategy or whatever lah. Okay, so I am adopting a 70-30 portfolio, but my 70 is actually investment, my 30 is my trading. And I adopt this portfolio mainly because I am able to generate sustainable trading income. I have high risk appetite. I dislike cash because cash is actually trash if you can trade. So if you are able to trade, right, any cash you have like sitting around is like they are not doing anything lah. Okay. So, and my goal is to generate a passive income of 5K per month. So I know my risk appetite, I know my strength, I know my goals, and with that, right, I have come up with this particular portfolio structure, this portfolio ratio that is going to work for me. But whether or not this is going to work for you, it may be different, but it is your job to go and identify what you want. Okay. So now let's go back to the parameters that we set for ourselves. Firstly, initial trading capital 30K. So there's no initial investment capital. Okay, we take it as you are starting, you are a self-made person. You are not receiving insurance, or you are not receiving like some trust. You are not a trust fund baby. Okay, you are a self-made person. You are starting from scratch. Okay, so you do not have any initial investment capital. You save up 30K, and then now you are also investing 1K a month, which come to 12K a year. Okay, so every year you are putting in 12K capital into your investment account. At the same time, you are also trading with your 30K trading capital. And your yearly trading return, right, minimum 30%, easily achievable. And then your investment return every year is 4%, also easily achievable. So let's take a look at all these parameters and see how long will we take to achieve the 1.5 mil. Okay, so let's say you don't trade at all. You don't have a trading capital, you don't trade at all. What you do is you every month put in $1,000 into a Milo tin can, and that money don't even like compound on itself lah. So if you do that, right, you will take about 150 years to achieve 1.5 mil. Okay, about 150 years like that. So by the time you achieve 1.5 mil, you are most likely gone lah. Then this money will probably pass down to your kids lah. But by then, right, the inflation will eat up your 1.5 mil until don't know where already lah. Okay, so obviously we cannot blindly save 1K a month and then hope that we achieve our 1.5K capital lah. Okay, so now let's say you don't trade, you don't have a trading capital, but you put in 1K per month. Okay, and then your 1K per month, right, is also compounding at 4% every year. Okay, so at the end of first year you have 12K, and then you get 4% gain. At the end of second year you got 24K, and then it get 4% gain, so on and so forth, right? If you do that, you will actually take about 44 years to get your 1.5 mil. Okay, so we actually speed up by about 100 years just by compounding 4% every year. Now, what if you have a trading capital, you are able to generate 30% return on your trading capital, But not only that, at the end of every year, you take out some profit from your trading, and then you rebalance it into your investment portfolio. How long will it take to hit 1.5 mil? Actually, it will take only 23 years. Okay, so from no trading to together with trading and rebalancing, right? You actually cut down additional 20 years, okay? And it is actually quite a significant cut. So let's take a look at in detail. Okay, so let's take a look at this spreadsheet. Same thing. Your initial trading capital, starting trading capital is 30K. You put in 12K per year, which is 1K per month, and you are getting 30% return on your trading capital. You're also getting 4% investment return on your investment capital, and you are rebalancing 60% of your profit. Okay, so at the end of the year, any the 30% profit that you make on your trading capital, right, you are reinvesting 60% of it into your investment capital. So what you see is that you start with 30K. In your first year, right, in your ground zero, you start with 30K. And then with the 30K, right, you will make 9K return now, okay? 30%, you will make 9K return. And within that 9K return, right, you will take 5.4K from the 9K, you reinvest that into your investment capital. So at the end of the first year, right, you will save up 12K, okay? You will save up 12K, but you also have that 5.4K, and then you will also have that 4%, okay? So at the end of first year, you should have about $696 from your investor capital, which is your 4%, okay? So as the years go by, right, what you will realize is that you are actually compounding your profit on two levels. Number one, your trading capital is also compounding 30% every year. And you will notice that you are only rebalancing 60%. You are not rebalancing 100%, meaning you will still have 40% remaining in your trading capital to compound the next year. So your trading capital will continuously grow. It will not be forever stuck at 30. And then not only that, your investment capital is also now growing at a very accelerating pace, okay? Because you are rebalancing a lot of your trading profit back here. So you will realize that it will take about 19 years to achieve your 1 mil target. Okay, so your 1 mil target is referring to your total capital, okay? Your trading capital plus your investment capital, you will get a total capital of 1 mil. So by the 23rd year, right, you'll be able to achieve your 1.5 mil target. But you'll also notice that from 1 mil to go to 2 mil, right, you'll only take 6 years. Whereas the first 1 mil will take you 19 years. The second mil will take you 6 years. And from 2 mil to 3 mil, right, it will only take you 4 years. From 3 mil to 4 mil, it will only take you 3 years. And you will realize that every million is getting faster and faster and faster. So let's say if you are able to achieve your 1.5 mil target, but you still want to continue to trade, you like trading, you keep doing what you're doing, right? You'll realize that it's very easy to achieve the subsequent millions, okay? So imagine you are like 30-year-old right now, and you sort of follow this plan, and this plan is very conservative because maybe in some year you might get 40% trading return, you might get 50% trading return because you are subscribed to Nimbus Capital. Or maybe some of the year, right, your yearly investment return is quite substantial because maybe you may get 5-6% dividend, or maybe your investment capital also have a capital gain. The STI ETF went into a bullish market. So these are not accounted for inside this model, okay? But if those happen, right, it can make your growth even faster. So imagine you are at like 30 years, you can actually achieve your 1 mil target by 53 years. And that is even before you hit your retirement age, even before your CPF money come out, okay? So you can try to play around with the numbers, try to play around with your initial trading capital and see what is an achievable target for yourself, okay? So I'm not going to give you this template. I lost it already. I don't know where I put it. It's very easy to set up, so please go and set it up yourself, okay? So it's quite easy. So this is my personal portfolio. So beginning of 2023 lah, okay, meaning today right now, my trading portfolio ended with I started beginning of the year with 130K, and then I ended the year with 54K profit lah, okay. So it's all in USD. So I actually ended the year with 246K in SGD. But I also have 422K investment that I've been continuously saving and compounding for like the past 9-10 years like that, okay. So on the investment portfolio, right, I'm dollar cost averaging Nikko AM STI ETF. My average unit buy price is about 2.98, and currently I have about 137,000 units lah. And this 14.4K, right, is actually the dividend. It's actually the dividend that I have gotten for this year lah. Okay, so if I add everything together, you will realize that my portfolio the ratio is 63 to 37. It's not actually 70-30, okay? Because I think the trading there, the profit was a lot higher than what I gained for my passive income. So the ratio skew a bit lah. So because this ratio skew a bit, right, I need to rebalance some of the profit here into my investment portfolio. But there can be cases where you lose money in your trading account for that year. So your trading ratio will go below 30, and then your investment ratio will go above 70, meaning to say you have to do the opposite, okay? You have to take out some money from your trading portfolio and put them in your trading. Sorry, you have to take out some money from your investment portfolio, and then you have to rebalance back into your trading portfolio. So that ensure that you have sufficient trading capital to do your trading, okay? But that is, of course, provided that you are proficient in trading. If for the previous 5 years you keep losing money in trading, right? Then of course, obviously you don't do that rebalancing lah. You go and learn proper trading first lah. Okay, so don't blindly do stuff. Also try to think over what you are doing. So in this case, I'm going to rebalance 60% of my trading profit into my passive investment. So what I'll do is I will take 60% of the trading profit, and then I'll be rebalancing about 43K lah. I'll be rebalancing 43K of my trading profit into my investment account. So what I do is at the beginning of the year, right, I will just take this 43K and then I'll just buy one lump sum of STI ETF and just throw it inside. And it's something that you probably have seen in my previous account. Wait, let me bring up. So at the beginning of 2022, right, I put a lump sum 20K that I rebalanced from last year trading, and then I'm doing 2K per month, okay? But you realize that in Jan, right, there's a lump sum 20K that is rebalanced from my trading portfolio. So the investment portfolio is truly passive and brainless. I don't time the market with this because I'm dollar cost averaging. So at the end of the day, right, at the end of 10-year, 20-year, right, the average buy price will sort of get normalized. So there's no point in trying to time your dollar cost averaging account. Okay. So once I do this rebalancing, right, and then I recalculate how much ratio within my investment and trading, right, you realize that it's actually 70-30. So this, how much you should rebalance is also actually up to you, because you may have different return for yourself, or you may have even higher return, then you might need to rebalance even more. Or if you have lower return, right, you don't need to rebalance so much. But 70-30 is something that I aim for. Or maybe you might be more aggressive. You realize that your trading is like really power. You want to do a 60-40 or a 50-50, you can do those also, but it's really up to you based on your comfort level and your own strength. Okay, so why STI ETF? Why not go for ETF like SPY or ARKK Or why not REITs? Since I am going for dividend, right? Why not just buy the REITs? So it's very simple. STI ETF provide average of 3% dividend every year. If you have been performing DCA through the COVID low, right? Or if you have been performing DCA for a considerable period of time, right? The dividend yield can actually go up to about 5%. So currently my dividend yield is somewhere about 6.5% like that, because I have been dollar cost averaging for a very, very long time already. Actually, there are 6 REITs in STI. You have Fraser, you have the 3 Maple Trees, you have Kaplan Ascenders, you have Keppel DC. And not only that, the non-REITs constituent like your local banks, Keppel, Semcor Industry, right? They provide competitive dividend. They are giving out like 3%, 4% dividend like that on the REITs level, okay? So there is no need to expose yourself to junk REITs, those that give out like 7, 8%, but they are really nonsense REITs, okay? That's why you don't see me buying all those funny REITs that are like the penny stock REITs, okay? So you won't see me buying those kind of REITs. And the thing is that STI ETF is like also diversified already, so I don't need to worry about any kind of diversification. So the purpose of this passive fund is for passive dividend income. It is meant for brainless passive income, meaning I don't want to make so much decision on this. I'm already spending so much time on trading, right? I don't want to make any kind of like I don't know, like research or whatever on my investment portfolio, okay? So I just simply go for STI ETF. And I do not need growth stock for investment also. You realize that I don't have any SPY or whatever, okay? This is because the capital that I rebalance from my trading portfolio, right, is my growth. That's my growth component. And not only that, my trading account is market neutral. It is a long short portfolio. It is properly beta hedged, which is to say that on years where stock market goes down, right, my growth component is not affected at all. So let's say if I do have a SPY or Vanguard or whatever in my investment portfolio, right, it will have suffered heavily in 2022. But since I'm already able to get a very high growth from my trading portfolio, right, I don't need any SPY ETF. So here, right, you can see how I am fitting my investment portfolio based on my strength and based on my needs. So there is no template at all. You cannot go and assume things like, oh, SPY is the best, ARKK is the best, I must have ARKK, I must have growth, I must have this, I must have that. I saw this template on the internet, I must die follow that template. No such thing. Go and figure out what you want. Go and figure out your strength. Go and figure out the kind of target that you want to achieve. Work it out. And then based on that, right, you model your own portfolio. You model your own strategy. And it is a matter of just really seriously sitting down one afternoon, think for 1 hour, and then you truly spend the time to work it out. You will be able to get it. Okay, so I am able to maintain my growth component through proper trading. Okay, so doing a performance check. Currently, this is my account at the 1st of January 2023, which is effectively tomorrow. Okay, so as I've mentioned, right, I started trading somewhere around 2014 and 2013 and 2014. Okay, so let's say my year 0 is 2014. Currently is 2023 already, so it's 9 years. So 9 years, right, on my 9th year, I should have this amount. Okay, I should have 83K in my trading capital. I should have 218K in my investment capital. My total capital should be about should be about 300K like that. But you realize that my account is a lot higher than here, simply because throughout the past 7-8 years, STI ETF actually went up quite drastically. And not only that, the COVID-19 allowed opportunity for very efficient dollar cost averaging. And not only that, along the way, right, there were several years where my trading performance is able to get 60%, 70% on certain specific year, especially during the 2020 period. Okay, so on certain years that I managed to outperform, right, it can compound your account further by a lot. It can slingshot you a lot. So I'm based on my years in the market, my years in the investment, I should be somewhere on my 9th year, around here. But based on what I have, right, I am actually somewhere around my 15-year where the total portfolio is about 650K, which is quite similar to what I have right now, even though the ratio is slightly different, right? But judging from the total portfolio, it is somewhere around there, okay? So because I am kind of like ahead already, I should be able to achieve the 1.5 mil target in like the next 8 years. But I mean, it seems like a lot, but still very long like that. But if I'm able to outperform this model, right, this model is a very conservative model. If I'm able to outperform the model, I should be able to get the target within like maybe the next 3-4 years, cross finger, okay? So this is my personal target, personal goal based on how much I can get my trading return. It's a very conservative target. So you can do this for yourself and see like based on your current capital, based on your comfort level, see what you want to achieve. So let's revisit this again, and you will realize that actually if you do very well, and in fact it's not really asking a lot, but if you are able to outperform these parameters, right, it can be even faster than 23 years, okay? So the purpose of portfolio rebalancing is to power charge your investment portfolio to create a super compounding effect, okay? Firstly, your portfolio is already have this compounding effect on the 4% return per year. But not only that, now every year, right, you are putting in additional injection from your trading portfolio. And this trading portfolio, the account also compound every year. So the amount that you inject into your investment portfolio, right, it also increase every year. So there is a dual compounding effect that is coming from both your trading capital and your investment capital, okay? So it's very important, and it can actually save you like maybe 10-20 years on your so-called financial target goal. So ensure that your trading capital does not take up majority of your portfolio. Is very important. That I mean, I often get questioned, right, if I'm able to get so high return, right, why not I just like all my capital in trading like that? Because number one, right, trading is really a high effort profits, and because of that, right, I do not want to risk so much also. And I also like, maybe there will be period where I don't really have the time, I want to take a break. And that is where the passive income is actually just doing its own thing, where I will be able to get that passive income regardless of whether I put in the effort or not. Okay. So my goal is that maybe somewhere along the year, I just want to reduce the amount of trading effort that I'm putting in also. Okay, so ensure that you are on it. The rebalancing of your portfolio also ensure you are on your retirement goals and target. Okay, so it doesn't just work for this kind of like trading investment 70-30. If you have a portfolio that is something like this, right, at the end of the year, right, you also need to ensure that you rebalance your portfolio so that it fits this ratio. For example, if your stock outperform, right, then you may want to TP some of your stock and then rebalance them into bonds and cash. Or if your bonds outperform, you may want to take some of your bonds profit, put them into stocks and put them into cash, those kind of stuff. Okay. Or maybe for that year, your stock crash, then you may want to take out some of your cash and put them into your stock to maintain the ratio. Yeah, ARKK gone case ready. No, my YOLO portfolio is not here. I don't account my YOLO portfolio simply because my YOLO portfolio doesn't grow one. Truth to be told, it doesn't grow. It doesn't grow significant enough It's just like, okay, I get 4K, 5K, and then the next month I will lose that 3-4K. It's like because okay, the thing with this YOLO portfolio, right? Every time I earn a big chunk, what I do is I will take that big chunk, I will like hope that that big chunk can become a bigger chunk. But what happens is I will lose that entire chunk, and then I'm back to square one. So for example, right, I will do a 1K option, that 1K become 2K. Then what I do is I will take that 2K, then hopefully it become 4K. then 4K hopefully become 8K, and then at some point I will lose everything, and then now I'm back to like square zero lah. But mainly because my YOLO portfolio is not meant for capital gain or for whatever lah. Okay, it's just there for the thrill, or for example, maybe if I am able to get a very big profit, like for example Tesla, I got about 5K. What I do is I might just take out 1K 2K and go and like I don't know, go and bring my family out somewhere, or go and eat at a nice restaurant, those kind lah. Real estate sector, are you talking about REITs, or are you talking about actual real estate? Like you are buying a bungalow? Actually, that one I have no experience like. I mean, if you are renting or what, because actual real estate, there's huge leverage involved in your mortgage, and then your mortgage rate, all this, it get a little complicated to calculate your return lah, because maybe it has a horizon of like 20-30 years, and then you need to calculate how much your mortgage compound versus your rental versus your capital gain, and then your equity versus your debt. It get really it get really tricky. So that one I can't advise lah. It's not my area of expertise. Okay, so go setting for 2022. Okay, this is for me, not you. So firstly, my goal for 2023 is I want to put in at least 20 hours of trading related activity every week lah. Okay, which will comes to about 4 hours per day, and normally I will put in this amount also, but now it's something that I want to sort of like do it on a consistent basis lah. And I want to generate 2 trade ideas per week, meaning 104 total trade ideas for 2023. So the thing with trade idea, right, it doesn't mean that I am trading, I am making 2 trades per week. That is not what I mean here. Generating trade idea means I'm just looking for trade, but they may be tradable, they may not be tradable, or they are sitting on my watch list but cannot enter because the technical didn't align, or the market is just very funny, or maybe I got too many shorts already, I don't need any more shorts. But I do want to consistently generate 2 trade ideas lah. Whether I take the trade or not is another question lah. Okay. So if you come for my course, right, you will understand this process of the trade idea generation lah. And third, minimum 40% portfolio return. So this is something that I believe can be done very easily. Close at least 60 trade for 2023. So normally, right, I am able to execute about 70 trades in a year lah. In fact, back in 2020, right, I was able to close about 90 trades. But in 2021 and 2022, firstly, I started giving course. So I mean, it's not an excuse, but it did took up majority of the time, and then I'm not able to execute enough trade also lah. But I do feel that with better time management, right, regardless I'm giving course or not, I should be able to execute at least 60 trade for 2023 lah. And execute at least 30 option trade, non-YOLO option trade. So I am beginning to go into option a lot more lately, and I do want to apply my option strategy in the coming years. Okay, so we'll be making a lot more option trade next year, but there will always be a choice for you to trade the shares also lah. If you are uncomfortable with option, I will definitely give a choice. Okay, you can trade the shares, but if you have option, you can play this option, something like that. Okay, but there will be very specific cases where you need the option for a particular trade, because trading the share is not as attractive. So there will be certain trade setup where trading option is the only option lah. Okay, so we may run into those situations, but I don't foresee to run them into those kind of situations quite often lah. Okay, next, I'm also learning macro and fundamental aspect of Forex. It's something that I started already, actually just started in November. I'm learning to trade Forex, but from the perspective of macro and fundamental. Okay, meaning just like my stock trading, there's no technical involved. So you might be a little bit confused. Can trade forex without technical, man? From what I understand, actually you can. And I also want to learn more about the macro and fundamental aspect of China market. And this one grow my YouTube channel to 1,000 subscribers. Currently, I have 640 lah. Okay, I still need another 300 more, but I think I'll probably focus on making more public video in the coming year lah. So these are your goals. Okay, if you don't know how to put your goals, right, let me set for you. But of course, depending on your trading experience, maybe these goals may not apply to you lah, because you probably already achieved them if you're already like at the expert level. Number one, learn option, learn the basic. Okay, please learn the basic, like what is call option, what is put option, all these. You can easily find them on the internet. And also go and review the bull call spread video that we actually did quite a while back. It's actually on Patreon. Let me find for you, okay? And then you go and dig yourself. Because we'll be executing some of the option strategy next week lah. Okay, so in next Saturday webinar, right, there will be 2 trades where we'll be using slightly more complicated option strategy. So at least take this week to brush up on your options and some of the option strategy lah. This wait shit. Okay. This one, okay? It was on 5th of December. There's a PowerPoint here, and this is the video. It's a very simple option strategy called the bull call spread. Go and look at it. And then after that, we will deal with more complicated stuff coming next Saturday. Okay. So next Saturday, I will go through option strategy for Palantir. We'll be going back into Palantir again. And also we will go through how to do damage control for VIX lah. Okay, but if you want to know how to to ensure that you don't get lost during that session, right? Make sure you brush up on your option basic lah. So learn to short sell, very important. If until now you have not short sell before, you're very scared. Oh no, I'm scared. Later the interest rate so high. Please go and learn how to calculate those interest rate. Please go and learn how to short properly lah. It's very easy one. You must learn to short sell because 2023 is still going to be like 2022 if you do not have short selling skill in your skill bank, right? You are definitely going to miss out a lot. Thirdly, get rid of the checklist and template mindset. So this one very important. Like don't go around looking for checklists like the moving average crossover check, the RSI 20 check. Okay, I can enter already. So get rid of the checklist and template mindset. I have start to as I grow, right, I start to learn that a lot of trading situation is really on a case-by-case basis because there's simply too many parameters for you to go and look to watch out for lah. So no 2 trading situation is the same. If you keep adopting the checklist mindset and you think that just by like ticking this checkbox you can be profitable, right? It's actually you won't be lah. You will realize that certain pocket period of time everything work for you, and then after that things just go like haywire and things that used to work no longer work already. Okay, so get rid of the checklist and template mindset. So learn to maintain a long short portfolio. This one important also. If you have not hold a long and short position together before, please learn to hold them. Spread trading, please go and look at the spread trading video PowerPoint also is very important. It's something that you may feel uncomfortable with, but you do have to start doing it lah. Okay. Mainly because once again, right, 2023 is not going to be a very easier to trade lah. So if you are always like 100% long, 100% short, those kind of portfolio, you will always get whipped out by the bear market rally or the sudden retrace lah. So 8 hours per week for trading related activities. Okay, I'm doing 20 hours. You can do with 8 hours. I think is very not demanding lah. Okay. So Monday to Friday, you put 1 hour a day lah. Okay, like from you come back from work, you have your dinner, then from 9 to 10, you go and look at your chart, look at your trading portfolio, whatever, set your stop loss level, this and that. Like there's definitely a lot of things to do one, okay? So like Monday to Friday, you can put in 1 hour, and then the remaining 3 hours you can put during the weekend. Like go and set yourself a target. You want to learn this, you want to learn that, okay? Start a trade journal, very important. If you don't have a trade journal, right, please start a trade journal. If no trade journal, I tell you, you can't improve without recording your progress, okay? Because sometimes you may be improving, but you don't know that you are improving, and then you start changing your strategy, you start following different person, you go attend another course, and then this and that, and then now you are back to square one, okay? So start your trade journal if you do not have one. Because sometimes, right, if you look at your trade journal, it can actually tell you a lot of things that you may not know about yourself. Or sometimes maybe you are actually improving, but you don't feel it. But as you look back at your close trade, right, you realize that, actually this year I'm doing a lot better, and it can give you that motivation now. Okay, so very, 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 very important. Start your trade journal. And ensure that 50% of your close profit trade, right, have more than 10% gain. So this one I want to elaborate a bit. So what do I mean by that is that all your profit trades, right, make sure the stock move more than 10%, okay? Make sure the stock move more than 10%. So what do I mean? Let me bring up my portfolio. So you can see here that I track how much the stock move, and you will realize that most of the time, right, they are quite high. Sometimes the stock move about 17%, 32%, 27%. Yes, there are some where 9%, or there are some that 7%, but most of the time, right, I'm able to get more than 10% or at least more than 15% movement from your stock, from the stock, okay? So for 50% of your profitable trade, right, ensure that the stock actually move more than 10%, because a lot of you are like a big profits already, or maybe your position is in profit and then the stock go down a bit, then scared, and then you already. And most of the time, right, what you end up is you will end up missing the big run because you chicken out, and then you are not used to seeing your profit dissipating, and then you just simply run. But majority of the time, right, it can actually go up one, or it can actually continue to go down one. You just need to be disciplined, okay? So don't scout 1-2% gain here and there. Like those are not sustainable trade, okay? Make sure you are able to hold on to the position and get that 10% gain, 20% gain. Very, very important. Ensure you do not add any more backholder stock in 2023. Important, okay? So let's say this year you trade something, you didn't cut loss, you end up backholding, I close one eye, okay? But next year, do not add any more stock into your backholder list, okay? Enough already, okay? If it hits stop loss, cut, just cut. Don't backhold anything, okay? And lastly, come attend our 3-month course, okay? So we are starting 3-month course in maybe after Chinese New Year. Actually, this for 2023 Chinese New Year quite early. So I'm not sure yet, most likely in March. We shall see how. Okay, so these are your goal setting and all your target setting. Is very important because it gives you a roadmap on your own performance, on what you want to achieve, and it really benefit you to work out the kind of portfolio structure that you want to adopt. Okay. So with all that said, right, let's just quickly go through our usual stuff, and then we can call it a day. I don't really have a lot of things to go through with you today, also because yesterday we went through most of the stuff. But let me just go through the usual stuff. Okay. Firstly, my portfolio, not much difference. I'm still holding all this stuff. WWE went into negative already, but it's okay. I'll just let it be okay. So I have dealer and WWE spread still ongoing, still being my Achilles heels. I have Carnival Cruise still in good profit. So Carnival Cruise is one of those counter that I'm referring to. Very important. Wait, let me show you. Like, yes, on Thursday went up, but don't need to panic. Okay. And here also it went up, recover, don't need to panic, you will actually come back down. So don't scare this kind of short-term like candle that go up, okay? Because there is no way you can get a stock that went down consecutively like that. I mean, there are some, but it's very rare, okay? So once in a while, you will see this kind of movement one. And if you understand volatility, this kind of movement, actually from the starting price, like 4% movement on Carnival, Carnival Corp, it's like a normal Monday like that. Like it's not a very big movement for Carnival. So if you understand the volatility and the distribution of return, right, you will know that okay, 4% movement on Carnival is nothing, okay, it's nothing out of ordinary. It's nothing that you need to worry about. But if I see a 4% movement in Apple, right, then that is something I may want to worry a bit, okay. So you need to understand like the how often a particular stock move, the degree of the movement, okay. So for example, things like Carnival Cruise, I think even for CarMax previously also, I think CarMax not so much. CarMax is kind of like consolidate, and then when it go down, right, it just jump down like that. Or maybe Louisiana, okay. So for example, Louisiana, we entered somewhere here. The second trade, it was somewhere here, but somewhere along the way, it will do those up and down, okay, like all these green color candle. Don't need to be afraid. Eventually, they will go down one. Just stick with your trade. I think initially Royal Gold also. I think Royal Gold a bit more. I would say. No, not this one. The original one. This one. Okay, so there were a lot of people cannot take it, like super duper impatient, want to run, and then the stop loss was here. Then a lot of people prematurely exited there and then missed the whole run, okay. So this kind of thing, right? The stop loss is there for a reason. It's there for a reason. So you have to ensure that you are obeying the stop loss. And of course, I mean, I'm not saying that confirm will go up, as long as it never hit stop loss, confirm will go up. It's also not like that. If it hit the stop loss, then of course you take the loss lah. But if not, right, there's no reason for you to run early. Okay, very, very important. So yeah, I'm holding this, but on top of this, right, I also still have VIX and FXI. So those are the additional two stuff that I'm holding. So let me show you my currently my open position is like this. I have 4 shorts, 1 long. I'm severely exposed on the short side, which is why I'm kind of looking for a long position. I may go for Palantir again. So we shall see next week how. I may want to execute Palantir before the NFP or I will find a long position before NFP okay. But I do need to balance out this portfolio a bit. There's too much short already. Even when I'm bear buyers, right, this number of short position is a little dangerous okay. So on my option side, recently Tesla 5,000. So my YOLO portfolio now is net 10K okay. So previously I went to net 15K, it went down to 6K, and then now it's back up to 11K. So it's always like ding dong around those levels. So I have FXI bear put spread, and I have a VIX bull call spread okay. So FXI is on the 17th of February. So there's a reason why it's on 17th of February also. So don't prematurely exit. If you have the normal share position, right, also ensure that don't prematurely exit, especially when the stop loss is not hit. Hold on to your trades. And shit, where did my chart go? And also looking at the overall market, right? Let's take a look at the overall market. Yesterday it recovers, but like don't read too much into it. As I mentioned, it is a stagnant market. That there's no high impact data coming in for this week. So the market is just very stagnant now. So yeah, don't read too much into all the price action that's happening there. So next week, right? Next week, even though it is a short trading week, we do have a lot of high impact data. Number one, we have the ISM manufacturing PMI, which is very important because last month, right, the manufacturing actually contracted for the first time since 2020. Okay, it's quite a significant number lah. And we also have the job opening. And on Friday, we have NFP and we have unemployment rate. So we will start to see the volatility coming back to the market. And actually on Friday also, we have the ISM service, the non-manufacturing PMI. Okay, so last month, the service PMI actually went up. So we shall see this month whether is it going to retrace, going to head back down, or is going to continue to go upwards. Okay, so we have a lot of important data that is coming in next week. So if you are heavily exposed to the short side, right, then maybe you may want to look for a bit of the long position. Okay, so like for example, my portfolio that I shared just now, I have four longs and four shorts and one long. But not only that, my options are also on the short side. Okay, VIX long is actually short the market. FXI put is also a bearish bias. So I'm actually a lot more bearish than what I should be my current portfolio. So I do need long position to balance things out a bit. So for technical on S&P, right, this is a very classic continuous pattern. Okay, it's a bearish flag. But we may see like a short recovery upwards before it start to come back down, like how it did here. So maybe during the non-farm payroll, things can recover. Then when the CPI come out next week, right, it may just go back down. Okay, so do be careful here. It might do a bit of swing here and there, simply because market have been stagnant. There's no high impact data for the past few weeks, right? When all these data come out in the coming week, market might just explode. So try to be careful a bit. And surprisingly, Tesla closed very strong. Tesla actually closed quite strong, 1, 2, 3. So if let's say next Monday, if the bullish buyers continue to come into effect, right? And if let's say the index, the S&P like sort of do a temporary breakout, then we may actually play, excuse me, we can actually play Tesla again. Okay, we shall see how. And also, thank God we didn't went for the Tiger and the Futu holding. Look at Futu holding, it went down even more. At least Tiger kind of like closed near the opening. Okay. So then that's basically about it. We shall have more trades set up coming next week. Okay. I don't really want to sort of get too aggressive with new trades in a very volatile week that is coming up. So be patient a bit. Eventually the trade will come. So one thing that I also want to share, this one really up to you whether you want or not. So I have created exam, Nimbus Capital exam. So actually this exam is for those who have come for the trading course. Okay, those who have come for the trading course. It's a theory exam, but it's a theory that tests you on macroeconomics and certain fundamentals. Okay, so I created a duplicate exam for public. If you are interested, you can actually take this and then see how well you do. Okay, so I'm gonna copy paste the link. Unfortunately, you will know the score, you will know your score, but unfortunately the correct answer will not be revealed to you simply because I mean that some of the correct answer actually is within our trading framework. So you can use this to test yourself on certain macro knowledge. Okay, so that's it, guys. That's all for today. So hopefully all the goal setting and all the New Year trading resolution will sort of get you pumped up, get you like excited to trade for the coming year, and hopefully we can all achieve the target that we set out for ourselves. Okay, so even for me, have been trading very long, but I'm still continuously trying to grow myself in terms of all this trading knowledge, trading different instruments like forex, option. In fact, I took very long to get accustomed to option, and finally now I have the confidence to start executing them in a live trades okay. Before that, I spent about almost the entire 1 year just studying all the theory and all those resources okay guys, so never stop learning, and if you want to be successful in trading, the most important thing is you must put in the time. You really need to put in the time. Put in that 8 hours per week. If cannot 8 hours, 4 hours per week, but set aside some time to do your trading, because it is not something that, oh, I'm free, I take out my phone, I enter order and I profit. No such thing. Okay, so it has, if you want it to give you consistent income, right, it has to be a part of your life. You must make time for it, and that's how, I mean, that's the nature of trading now. Okay guys, so have a great new year, and go and like go to wherever you guys want to count down now. Okay, so cheers, happy new year, see you next week. How do I invest? Actually, I do it through Poem. They have the share builder plan, and then every month they just take $2,000 from me. You can actually do it manually also through Tiger. Actually, I should start doing manually because the the charges are a lot lesser. But Tiger don't have to scared because anything that you buy, right, it is not held by Tiger. It's actually held by, I believe, DBS. Singapore stock are held by DBS, and US stock are held by IB. Is it IB? I think yeah, Tiger don't hold your shares so they are just the middleman so you don't have to be scared. Yeah, DPS Vicker I think also can you have to go and calculate the amount that you want to put in and make sure that the minimum charges, right, they don't take up too much of your capital okay. For example, if you're only putting in $500 per month, right, then Poem charge you what, $6. That's like ridiculous. 1% really. Every month is taking 1%. That means you need like 6-7% yearly gain to sort of like beat the charges. So the amount that you want to put in is also quite important Yeah, tonight's session I will upload, but tomorrow, yesterday one like nothing Yesterday one we are just talking nonsense, and then we're just celebrating our Tesla profit because whenever I upload the Friday video, there's only like 4-5 views like that. Yeah, but I mean, if I feel that I mentioned anything important during Friday session, right, I will upload But yesterday's session, nothing much Any more question? Thanks everyone for your support. We shall have our third year going forward. Hopefully within this third year, I'm not the only one who is able to get positive return. Hopefully everyone is able to get the positive return also, and we can all work together. Thank you. Okay, guys, have a good night and have a great new year. Bye bye. I'm logging off now.